Now for our featured story of the day, Satoshi Nakamoto's early partner, Hal Finney, rest in peace, predicted Bitcoin at $10 million per coin, very long time ago. And we'll also be sharing bonus story, Bitcoin of 500,000, according to Standard Chartered Bank, doubling down on their 2028 target. And if you don't know, Standard Chartered, big bank over in Europe, and the primary shareholder is BlackRock. So more bullishness coming from the BlackRock. But first, let's dive into Hal Finney's infamous $10 million price projection. You should be able to see this pulled up on the screen. Bitcoin's meteoric rise over the past 15 years has turned many skeptics into believers. You can say that again. But could it ever reach the heights predicted by early pioneer Hal Finney, who speculated that Bitcoin could one day be worth over $10 million per coin? I feel it's like a given. It's inevitable. The $1 million question is when, what year, right? So back in 2009, Finney, one of Bitcoin's earliest adopters, ran a theoretical calculation to estimate Bitcoin's long-term value. He assumed that if Bitcoin were to become the dominant global currency or a key store of value, its token market cap would need to match the world's total wealth. At that time, roughly 16 years ago, he estimated the global wealth to be in the range of $100 to $300 trillion total addressable market. With Bitcoin's supply cap at 21 million, dividing these figures results in a potential price of 4.7 million to 14.2 million per bitty. Factoring in future economic growth and inflation, some estimates push this number above 22 million per BTC. Now, Hal Finney was one of the first people to believe in Bitcoin. Back on January 12th of 2009, he received the first ever Bitcoin transaction, 10 BTC. Now valued at roughly $1 million. And from Bitcoin's anonymous creator, Satoshi. This made him one of the earliest adopters of Bitcoin. Finney worked closely with Nakamoto, helping to improve Bitcoin's code and testing the early versions. Some people even thought he might be Satoshi himself, but of course, he always denied it, as Satoshi would. And for Bitcoin to reach such astronomical figures, it would need to displace gold, fiat currencies, and other assets of the world's ultimate store value, in which we all know is the hardest money. It's uneffable, it's impregnable, hence it's a pretty little bitty going up. Institutional adoption, sovereign wealth fund allocations, and global economic shifts would have to drive its market cap into the hundreds of trillions. However, Bitcoin's relatively small market cap of 1.9 trillion in 2024 suggests it has a long way to go. Meanwhile, podcaster Patrick Bet-David challenged Mikey Saylor on MicroStrategy's long-term value, suggesting the company could grow into a $10 trillion giant if Bitcoin reaches 13 million per coin, which is Saylor's bear scenario. And in November of 19th on the pod, Bet-David calculated that if Bitcoin adoption jumps from 0.1% to 7% and Bitcoin surges from 90,000 to $13 million, MicroStrategy, now known as Strategy B's valuation, could increase 144x. Quoting him here, if I do 144 times 73 billion, you're estimating it to be 10.5 trillion company in 21 years. Is that correct? He asked Saylor, and Saylor agreed, saying, with that math, yeah, Bitcoin goes from 90,000 to 13 million per bitty. And at that time, MicroStrategy, which is now Strategy, had a market cap of 85 billion, while Bitcoin was priced at 97.5. So if Bitcoin reaches 13 million, MicroStrategy's market cap would scale approximately exceeding 11 trillion based on the current valuation ratio. I like to also point out, in the past 16 years, the total addressable market also climbed significantly. So we're no longer calculating 100 to 300 trillion, but estimates are now like 700 to 900 trillion, which ultimately means Bitcoin could more than double off the speculation of the 10 million to 20 million, just FYI. And the other story here is a bonus. Standard Chartered doubling down on their bullish price trajectory. Let's break it down. According to the new report from Standard Chartered, they cited by Block, their analyst Kendrick, not Lamar, sees growing signs that government-backed instrument vehicles are ramping up their investments into Bitcoin and their interests. The view reinforced by Abu Dhabi's recent disclosure of the 4,700 Bitcoin, which is approximately $500 million, equivalent position of the BlackRock Bitcoin Trust IBIT. They announced they're holding it in their sovereign wealth fund, quoting Kendrick here. While this is small for now, we would expect the size to increase over time, and indeed for other sovereigns to start also buying. He also wrote in the Tuesday report explaining Abu Dhabi's move marks a strategic shift and could presage broader participation from the other wealth funds around the world, which there's a lot of wealth in. Kendrick's confidence is partly rooted in the Form 13F filings, quarterly reports that institutional managers overseeing at least $100 million in assets are required to file with the U.S. SEC, reviewing data from the fourth quarter of 2024. Quoting him here, the 13F filings for Q4 show that process is underway. It's happening, he said in an email to the block. In Standard Chartered's analysis, Q4 data revealed that while hedge funds maintain their lead in the Bitcoin purchases, banks, which began buying in Q3 of last year, also ramped up their positions, also drawing parallels between the earlier stage and the Bitcoin market evolution, dominated by the retail investors, and the more recent era, which saw the hedge funds and the institutional FOMO like a mofo jump abroad on the ETFs. And now the spotlight appears to be broadening further to include state investment managers as well as the central banks. Quoting the report, this gives us comfort to say that even if buying by strategy, formerly known as MicroStrategy, slows down dramatically, it has bought a staggering 227,000 Bitcoin since the U.S. election. Damn. More than 1% of the ever-to-exist supply. And I believe Michael Saylor's goal is to get to 5% of the circulating supply, which would be approximately 1 million Bitcoin, which is what Cynthia Lummis proposed for the U.S. So how many companies like MicroStrategy, now known as Strategy, or governments like the U.S. will be able to say we have 5% of the circulating supply? Not many, as there's a finite limited supply. We think other buyers are waiting to step in. Facts, I'm sure it's happening. The mention of MicroStrategy underscores just how significant one private company's Bitcoin holdings can be. Yet, Standard Chartered's analysis suggests that other large patient pools of capital might absorb the future supply, thus supporting the higher prices over the long term. And amongst the institutions, Kendrick highlights the state of Wisconsin Investment Board and the state of Michigan Department of the Treasury. However, he also points to central banks as potential new participants. In the report, they referenced the Czech National Bank, which considered allocating up to 5% of its 150 billion in euros in reserves into the Bitcoin, and notes that the Swiss National Bank is in the early stages of contemplating a similar move. We call this game theory, global hash wars. These developments could further bolster Bitcoin's legitimacy as a store of value on par with more traditional asset classes. And as the institutional access to the Bitcoin improves, volatility declines, we expect more portfolios to migrate towards their optimal level from the underweight Bitcoin starting point. So what are your thoughts? Again, they personally believe 500,000 will happen by the year 2028. So let me know if you agree or disagree with the analysts over at Standard Chartered. And with that being shared, what I'm going to do next, and again, welcome everyone join the stream, close to 1,200 people here. I'm going to play a short 1-minute video that was captured from Chandy's phone at the 100K Bitcoin Fiesta, Puerto Rico, just in case you guys missed it. And then we'll flip this mofo into a pump watch.